Back in early June, we were in our morning clothes. Many hearts were broken. The deadly shot from the SEC at Cardano was unexpected and shocking. The ADA coin price sank to the lows and investor sentiment turned sour. The future seems bleak for Cardano, but not so fast. There might be a big catch here. So let's get to a quick recap. Recently, the Securities and Exchange Commission initiated legal proceedings against Coinbase, one of the leading cryptocurrency exchanges in the United States. This move came less than 24 hours after a regulatory body filed a lawsuit against Binance, another prominent player in the cryptocurrency market. The SEC's allegations against Coinbase involve evading a disclosure scheme for securities market and operating as an unregistered broker, with the violation dating back to at least 2019. Of course, the SEC's lawsuit raised serious concerns, as it added that Coinbase sold unregistered securities, including the Cardano coin ADA, which was also implicated in the legal action against Binance. The regulator argued that ADA should be classified as a security based on publicly disseminated information by Cardano, IOHK, and Emergo, especially since its initial sale. But it didn't just end there. The lawsuit further asserted that ADA holders, including those who acquired the token after March of 2021, were made to believe that their investment in ADA was connected to the development of the efforts of the Cardano Foundation, IOHK, and Emergo. These investors expected to profit from the platform's growth and expect a subsequent surge in demand and value. The SEC's actions against Coinbase followed closely on the heels of the lawsuit against Binance, which sent shockwaves through the cryptocurrency industry. Both exchanges were regarded as major players in the market and have enjoyed popularity among investors, and the timing of the legal actions definitely raised some eyebrows, suggesting a broader crackdown by regulatory bodies on the cryptocurrency sector. Coinbase, founded in 2012 with its headquarters in San Francisco, has been at the forefront of the cryptocurrency revolution, providing a user-friendly platform for buying, selling, and storing various digital assets. Notably, the exchange has garnered a significant user base and carved itself a niche as a trusted and regulated entity in the cryptocurrency space. But everything went bust as the SEC's allegations cast a shadow of doubt over the company's practices and compliance with securities laws. Coinbase was not silent in response to the lawsuit. The exchange issued a statement expressing its disappointment with the SEC's actions and highlighting its commitment to complying with all of the applicable regulations. Coinbase hammered that it cooperated with the SEC over the years and sought to engage in open dialogue to ensure compliance with securities laws. The exchange maintained that it has not engaged in any unregistered security offerings and intends to vigorously defend against the lawsuit. Whatever happens, the outcome of the legal battle between Coinbase and the SEC would undoubtedly have far-reaching implications for the cryptocurrency industry as a whole. Well, one of the things which ran through our minds is that while the SEC's actions are aimed at protecting investors and ensuring fair market practices, they also raise questions about the clarity and adaptability of the current regulatory frameworks. Cardano, of course, was caught in the middle of it all, and so many bumps now seem ahead of the ecosystem. A recovery is definitely needed, but how do we go about it? Now, certain crypto exchanges delisted Cardano ADA and other affected coins. No one wants to stain on their clean slates. So recent disclosure in the Cardano community revolves around the potential significant liquidation of ADA by both Robinhood and Celsius. But let's get the facts right. In the Cardano ecosystem, a wave of concern is spreading over the possibility of a large-scale liquidation of the ADA token by Robinhood and Celsius. The reasons behind the decision of these two platforms differ, but the wrath of the considerable sell-off has triggered some alarm bells within the community. I mean, let's be honest, who wouldn't run for their dear lives? Opinions within the Cardano community are now mixed. Some are of the view that such large-scale disposal will not be a unique occurrence for ADA, hence toning down negative conjectures as manifestations of fear, uncertainty, and doubt. Rick McCracken tweeted, "I don't think it's FUD. I'm actually personally a bit concerned because that is ADA frozen that will be released into the wild. Not too concerned though, just need to watch my CDPs don't get liquidated because they decide to dump in the middle of the night." They argued that the cumulative holdings of both Robinhood and Celsius constitute a small proportion of the total ADA trading volume, and holders have been provided with enough time to migrate their ADA holdings to alternative wallets. And if you haven't already, then you should definitely do this too. Now, supporters of this view attest to the fact that the market has already assimilated the impending event that the pervasive dismay surrounding it is having a larger impact than the actual sales. Yet some in the community find themselves at odds with the situation. Robinhood announced a cutoff day, and Jump Crypto, tasked with managing Robinhood's crypto assets, will be obligated to immediately divest itself of its remaining ADA holdings. Celsius, on the other hand, relishes greater flexibility and is expected to phase out its ADA holdings over a prolonged period. However, the core question that remains is the path of Jump Crypto will take in this scenario, with options spanning from an off-market sale to transferring the assets to centralized exchanges. The Cardano community is already on its toes, keeping a close watch on the evolving situation, as the prospect of significant ADA offloads by Robinhood and Celsius remain a real possibility. Now, amid this situation, what is the catch that we talked about? So, I think it's time that you've heard it. Hong Kong had made a big move recently. Hong Kong Virtual Asset Consortium, or HKVAC for short, made a significant announcement revealing the launch of its highly anticipated Virtual Asset Index. The index aims to capture the performance of various cryptocurrencies and provide local investors with a thorough overview of the market. Notably, this index includes 3 prominent cryptocurrencies: Shiba Inu, XRP, and would you guess it, Cardano ADA. Furthermore, to ensure fair representation, the index also includes Bitcoin and Ethereum, as well as some stablecoins. HKVAC has set stringent standards for inclusion in the index, demanding a median market capitalization of at least $10 million over the preceding 3-month period, along with a median daily trading value of less than $900,000 during the same timeframe. Consequently, the first composition of the index features the top 30 cryptocurrencies that meet these requirements. Binance tweeted, "HK moving forward." Also, renowned crypto journalist Colin Wu shed light on the backing received by HKVAC, expressing that the institution enjoys support from influential figures such as Hong Kong legislator Johnny Ng, as well as major players in the industry like Huboy and KuCoin. However, it is a significant thing to note that the index is non-governmental and does not have any official regulatory status. This development comes hot on the heels of another major event, as HSBC Hong Kong recently allows customers to trade ETFs for Bitcoin and Ethereum. Plus, Hong Kong's growing acceptance of integration of cryptocurrencies demonstrate its commitment to embracing the digital revolution in the financial sector. Now, moving forward, this scenario seems to be in favor of crypto in general, with other bonuses involved. Chinese cryptocurrency journalist and insider Colin Wu noticed an interesting statement made by the head of Hong Kong watchdog responsible for trading regulation that it might include context to previous signals by local governmental bodies. And as the US tussles with regulatory challenges around the cryptocurrency, there may be a silver lining for Japan. Now, this was the suggestion from the former CFTC chairman, Chris Giancarlo. From Tokyo, Giancarlo tweeted a snapshot of Japan Times headline reading, "Crypto tumult in the US might be a boon for Japan." This reflected his observations about the US policy and the potential impact on the Asia-Pacific region, coming at a time when the US Securities and Exchange Commission is embroiled in lawsuit with cryptocurrency exchange giants Binance and Coinbase. Now, so much has already happened already, and ongoing regulatory battles in the US still raise question about the ripple effects on the global market. The collapse of FTX previously, a top-tier virtual token exchange, had put the industry on edge, and the SEC's recent action was also another major setback. However, some insiders in Japan see an opportunity amid the US turmoil. With an established legal framework in place, they believe Japan could further solidify its position as a crypto-friendly nation. A vocal advocate for the cryptocurrency industry, Giancarlo, is widely known for his crypto-friendly stance. His approval of digital currencies include a controversial statement that Ripple's XRP is not a security, a subject currently on fierce debate in US regulatory circles, and has been going on for a couple of years. Given the existing regulatory framework, industry players in Japan expect that their country largely remain unscathed by the ongoing crypto storm in the US. Quote, "The US is squandering an early lead, in part because SBF embarrassed some politicians and regulators who now want to look tough on crypto," Coinbase CEO Brian Armstrong tweeted in response to Giancarlo's statement. Well, tough or not, Cardano is poised to survive, so we expect to hear more good news. Just make sure you hang in there. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and I'll see you in the next video.